One of the biggest misconceptions about ETPs is around the topic of liquidity. Generally, ETPs have two sources of liquidity: the ETP itself and the liquidity of the underlying assets. Unlike normal stocks, ETPs do not have a finite number of shares that can be created. They're open-ended products, meaning more shares can be created or terminated based on demand. Many people look at daily trading volumes as an indicator of liquidity, but this will only show you what has been traded, not what can be traded. Hence, regardless of low trading volume or assets under management, investors are better off looking through to the underlying assets for indications of liquidity and not the ETP itself. If you want to learn more, click that subscribe button.